Hey, good morning, everybody. Let's do a daily bites here since we missed out on Thursday, January 9th. So we're going to get one going here January 10th. This is right after the jobs report was just released. Apparently, jobs report was very positive and strong for the economy, of 256,000 new jobs created in December. Unemployment rate ticked down a little bit. We also saw a tick down in wages, but still a little bit inflation there, 3.9%. We did see some tightness in the U3 and the U6 as well too. So what does this mean? This means that the Fed can't afford to wait on any more rate cuts going forward. In fact, I suspect that maybe all entire 2025, we're not going to get any rate cuts at all. The market is still pricing in about 1.5 rate cuts. We haven't seen the adjustments being made yet to Fed funds futures, but I suspect that's going to go down to 1 or possibly less than 1 by the end of the day. So this is a very important report. It's going to craft what policy is going to look like over the next 3 to 4 months. Of course, things can change. The Fed is much more inclined to listen to the data and move policy based on what the data is telling them to do. But as it is right now, they can afford to wait right now and suspect that the pause that Chair Powell was talking about at the meeting last month is going to be in place for the foreseeable future. So the stock market is going to have to find some other vehicle to help them move forward in markets. It's not going to be interest rates, because interest rates are going to basically stay where they are right now. Remember, a few months ago, the Fed and Chair Powell were talking about the fact that they really don't know where the neutral rate is right now. They're finding it, looking for it. It could have been 4.5% or 4% or 3.5. They don't know. They're feeling around for the right spot where the Fed funds rate can be neutral. So for now, it looks like 4.25 is where it's at. We had 100 basis points of rate cuts in 2025 from September to December, and it looks like that's going to be it for right now. The Fed funds futures not really liking the strong jobs report for this particular reason about Fed funds futures. So we did see a good pop in volatility and right back down again. So we may see a little bit of a move right back up in the markets later in the day. But I will tell you, it is the best thing to do right now is to keep a lot of cash on hand. Volatility is still elevated. We're going to have some big moves. Remember, we had some huge wide moves in the markets on Wednesday because volatility is still elevated, and we still see the VIX is up to about 1881 right now. It's up a little bit right now, and the futures are down 50. S&P futures are down 50. Dow Industrial futures are down about 330. We did see some good earnings reports from Delta Airlines and a couple other names. Constellation, not so good. Delta Airlines is strong. It's helping to lift all of the other airlines like United Airlines and American Airlines and Southwest. So that was a really good report, and they also gave good, strong guidance. So we'll see if that has an effect on some of the other areas like credit cards and travel in the industrials, and also in the rest of the market, S&P 500. But for now, I'm going to tell you that you got to play it a little bit cautiously right now. Play it close to the vest. I saw that some of the technology names that we loved to trade so much are getting beaten up today. Taiwan Semi did come out with some good numbers overnight, but it may likely be a sell on the news event here. Microsoft down a little bit. I see Meta is down about $5. Some of these stocks are going to come back around earnings season, which is going to be starting up in about a week or so. We do have a full week. Next week is the first full week of the year. Trading next week, and then we have a day off on the 20th for Martin Luther King's birthday. But we do have a full week next week, and we'll see how things go. Of course, don't forget, next Friday, January 17th, is the last trading day for January options. We see a lot of leaps that are going to expire on that day as well, too. So it's going to be a huge volume expiration on the 17th. So that's going to be it, folks. Just real short one here. And again, thanks for spending a little bit of time with me today. Again, play it cautiously here. This is not anything you want to really get involved in a big way. There's no trend right now. We have a huge range between 5860 to the downside and about 6100 to the upside. So we could trade anywhere in between there, and the market is still not bullish or bearish. So If we break one of those levels, then we'll play it more aggressively and accordingly. So that's it. Have a great day, everyone. Have a wonderful weekend. I'll see you guys all back on Monday. Thanks.